Hi, today we are going to discuss another important topic, revenue recognition under installment of sales method or the cost recovery method. Sales is the most important revenue of a company. Sales may be cash sales or credit sales. Cash sales means when the goods are sold, immediately receiving the money. Revenue is recognized, you can properly record in the books of account as revenue received. We are following accrual basis of accounting. Therefore, cash sales and credit sales can be considered as a revenue of the company. But certain circumstances, in the case of long-term construction contracts, and sometimes the customer unable or sometimes the customer is not paying the installment money in time. Most of the companies are selling their asset in installment basis. The customer is paying the money on some installment basis. So the sale price cannot be assured. At that time, we can use installment of sales method and cost recovery method. Our main point is how revenue is recognized under installment of sales and cost recovery method. Here, if the collection of the sales price is not reasonably assured, sometimes the collection of the sales price is not reasonably assured, revenue recognition will be only a deferred. If the sale price is not assured, we can book as a deferred revenue until the company receive the cash. Until the company receive the cash, that income can be treated as deferred revenue. In such a situation, either we can use installment of sales method or cost recovery method to record the revenue. From the company point of view, how we can record revenue? As per accounting standard says that revenue is recognized when the goods and services transferred to the concerned customer. But we have to face different situations. Long-term construction contracts are there. Installment of sales method is there. At that time, how we are recognizing the revenue? The major point is sale price is not assured. At that time, we are using two methods. That method is known as installment of sales method and cost recovery method. Then we can discuss what is the accounting treatment for installment of sales method. How we are doing the installment of sales method revenue recognition. This method is used only when there is no reasonable basis for estimating the degree of collectability. Installment basis is used. We cannot estimate reasonably the total amount. The degree of collectability we cannot reasonably estimate in this case. This method is used, this installment of sales method is used when there is no reasonable basis for estimating the degree of collectability. Under this method, revenue is recognized at the time of sales is made, but rather than cash is collected. This method, revenue is recognized when the sales is made, but rather than when cash is collected or received. Here, in order to calculate the revenue, we have to use these formulas. Gross profit is equal to sales minus cost of goods sold. Gross profit ratio is equal to gross profit divided by sales into 100. End GP is equal to cash collection multiplied by GP ratio. Cash collection multiplied by GP ratio. Deferred GP is equal to installment receivable into GP ratio. So these are the important formulas to be kept in mind while doing accounting treatment of installment of sales method. We know that this method is normally used when we cannot assure the reasonable, estimating the reasonable basis for collection. Under this method, revenue is recognized at the time of the revenue. We already discussed it before, but the sales is rather than when cash is actually received. So in order to recognize the revenue or in order to book the income, we have to know the following formulas. Cost of goods sold is equal to, what is the formula for cost of goods sold? Opening stock plus purchase minus closing stock. GP is equal to gross profit is equal to sales minus cost of goods sold. We know that how to calculate the GP percentage. GP divided by sales into 100, you will get the percentage of GP. Earned GP is based on the cash collection. How much amount you collected? Cash collection multiplied by GP percentage, you will get earned GP. How you will find out the deferred GP? Deferred GP means amount to be collectible. That is known as installment receivable. Installment receivable into GP ratio, you can find out deferred GP. Installment of sales method, revenue recognition and realization of GP and deferred profit. How we can find out the percentage of GP, everything we can understand through an example. The information given as per the example is installment of sales is 400,000, that is on 1st January. Total sales we can say 400,000 is the total sales. Balance in the installment receivable pending to receive is 150,000. Cost of goods sold is equal to 300,000. This is the cost of the product. You have to calculate realized GP, deferred GP, and you have to pass the journal entries for affecting the above transactions. So this problem we can do step by step. First, step number 1, we have to calculate GP. What is the exact GP of this? Sales on installment is 400,000 minus cost of goods sold, you will get the total GP. Sales minus cost of goods sold is equal to GP. GP, the second step is we can calculate the percentage of GP. GP divided by sales into 100, that is 100,000 divided by 400,000, then you will get the percentage. 25% is the GP percentage. Step number 3, we can calculate the earned GP. Earned GP means it is always based on the collected amount. Total sales is 400,000. Ending receivable pending is 150,000. That means you already collected 250,000. 250,000 credit sales or receivable you have balance. You already collected that one. So the percentage of GP 25%. Therefore we can say earned GP is equal to 2,50,000 multiplied by 25%, 62,500. So this type of questions, firstly you have to calculate the GP. Secondly, the GP percentage. Third, earned GP, you have to calculate the earned GP. Then the fourth one is you have to calculate the deferred GP. Deferred GP means the pending amount. How much is the pending amount? Ending accounts receivable is 1,50,000. Still pending is there. 25% is the GP recognized. Therefore, deferred GP is equal to 37,500. From this question, we already calculated 4 important points. First one is GP calculation. Second one is percentage of GP. Third one is earned GP. And fourth one is deferred GP. Once again, we can discuss what is the GP. GP is equal to sales minus cost of goods sold. We got the GP. Then we have to calculate GP percentage. That is GP divided by sales into 100 is equal to 25%. Then earned GP will be based on the collection, actual amount collected. How we can find out? Total sales is 400,000. Now we can see the ending accounts receivable is 150,000. Therefore, the collection is 250,000. GP percentage we already calculated before. Based on that, the earned GP we can say 62,500. Next, the last step is deferred GP calculated. Deferred GP is always based on ending accounts receivable, that is 150,000 is the accounts receivable balance. GP percentage is 25%. Therefore, deferred GP is equal to 37,500. What are the journal entries? How we can write the journal entries under this installment of sales method? First entry is entry for the sales. What is entry for the sales? Installment of sales account debtor to inventory. Total sales is 400,000. Cost is 300,000, that is inventory. Therefore, we can say deferred GP is 100,000. Cash collection, how much amount you received? 250,000 from installment of sales. Then recorded profit collection, how much? Deferred GP account related to real GP, 62,500. Then how these items are showing in the balance sheet? Accounts receivable outstanding or the year-end balance is 150,000. Deferred GP we already recorded 37,500 and the exact amount of accounts receivable out balance is 112,500. So 1, 2, 3 journal entries are there. First one sales entry and the cost entry you can see there. Second, the cash collection entry. Third one is recorded profit on collection. And the fourth, how these items are presenting in the balance sheet. Accounts receivable is in a balance sheet current asset. We will show like this. Accounts receivable ending balance is 150,000 minus deferred GP. It will be the balance is 112,500. Next, we can discuss cost recovery method. Second method is cost recovery method. Under cost recovery method, no profit is recognized until all the costs have been collected or recovered. Under cost recovery method, thus no profit is recognized until all costs have been recovered. At that time of sales, we will record only expected profit on sale. That is known as deferred GP. In the case of the cost recovery method, the revenue is recognized until all the costs have been incurred. Hence, at the time of the sales, whenever the sales is occurred, we can record as expected profit on sale, that is known as deferred GP. Cash collections are first applied to the recovery of the product cost. First installment, second installment, third installment, it will be treated as an recovery of the product cost. We are recovering the product cost. When you receive more amount than the product cost, that will be treated as our profits. Cash collections are first applied to the recovery of the product cost. Collections are after the collection, that means after the product cost, you are collecting anything that you can recognize as a profit. This method is normally applied to the installment of sales method. In that, it may be used only when receivables are collected over an extended period of time. We don't know when it will be collected. Maybe the period will be extended. The receivable collected period will be beyond some limitations are going on. And there is no reasonable basis for the collectability. We don't know when we will collect. There is no base for the collectability. At that time, we are using the cost recovery method. No profit is recognized until all the cost is collected. So this method is most conservative method for recognizing the revenue of a company. So some of the companies are following cost recovery method. When we are following the cost recovery method, when the receivables are collected over an extended period of time and there is no basis for that collection, at that time we are using the cost recovery method. Cost recovery method, the collections are treated as the product recovered cost. After the product cost, you are collecting anything that can be treated as profit of the company. To understand this cost recovery method, we can discuss with an example. Cost recovery sales is 400,000, balance in the receivable is 150,000, cost of goods sold is 300,000. We have to calculate the realized profit and deferred profit, and you have to pass the journal entry also. Firstly, you can calculate it. Cost recovery sales as per the question is 400,000. Cost of goods sold is given in the question, that is 300,000. Therefore, total GP realized 100,000. Cash collections, we know that one. First collection 250,000, the remaining second year collection 150,000, total 400,000 we reach. How these items are, write in a journal. Firstly, to record the sales, cost recovery receivable 400,000, inventory value is 300, then deferred GP is 1 lakh here. First year collection, cash account debt to collection, cost reconciliation receivable 250,000. Second year again we are collecting the next installment, cash account debt to cost receivable, that is 150,000. Then we can show what is that one recorded GP is there. Deferred GP 100,000 and realized GP is 1 lakh. So from these, the cost recovery method, we clearly understand that what the revenue is recognized only all the installments are collected. If the cost should be covered, if you are receiving after the cost covering anything, we can say that is the exact realized profit of the company. Firstly, how to record the sales. Secondly, the first year collection, second year collection, and GP recorded GP entry. Deferred GP account debtor to realized GP. So today we discussed about cost recovery method and installment of sales method, revenue recognized. What is the meaning of the cost recovery method? And what is installment of sales method? How the revenue is recognized? What is the deferred GP? What is the total GP? Percentage of GP? All these points we today discuss in this topic. So you can go through this problem also. You will get a clear picture about these two methods, installment of sales and cost recovery method. Thanks.